I'm Dan Fitzpatrick at RealMoney.com. Every night we watch the same shows, Fast Money and Mad Money, and we want to use those ideas to grow our money. Well, good trading takes more than just writing down the tickers you see on TV every night and punching the buy button the next morning. I can help you know when to buy these 3 stocks I saw on TV. Today, let's look at Clean Energy Fuels, Magnachip, Semi, and Whole Foods Market. Cramer was talking to the CEO of Clean Energy last night on Mad Money. He thinks this is a stock that you got to buy now. Now, here's the weekly chart. I'm looking at this going, it just doesn't really work for me here. I mean, the stock's trending lower. But then you look at the daily chart, and I kind of get a little different sense here. First of all, it would be nice to have volume on this big sell-off here, this big sell-off and reverse. Bottom line is the stock bottomed here. Big old long dragonfly doji. Volume was pretty strong. That's a good thing because what it reveals is it's basically been like a puke fest, and everybody, all the weak hands, as they say, got out of the stock, and now this stock is now rebuilding. It's a nicer base, right? But what I would rather have is this kind of volume. That would make me feel a little bit better. But still, so you can see the stock hit a bottom here. It's still trending below the 50-day moving average. But it's starting to look a little frisky to me. That's a technical term. But it's banging up against the 50-day moving average, not really pulling back too much. So what I want you to do is wait for the stock to close above the 50-day moving average. And I know it's done that before, but if the stock closes above the 50-day moving average here, it's going to have plenty more juice to go higher. Whereas back here, look at the move that it had already made. So it took a substantial amount of buying pressure to finally push the stock above that level. Here, we don't have that type of thing. It's not going to have to move much at all before the stock's on a breakout. Now, Cramer's also a big Magnachip guy. Okay, this is a trade on Apple. He thinks that this is a stock. It's thin, trades pretty thin. Yesterday, 133,000 shares. Oh, let's not forget that last 100. Okay, so this trade's really thin, and Jim is saying, look, you darn well better put in a limit order. You're going to buy this thing for 15 bucks. I mean, it's that kind of deal. Now, most of you will pay attention to that. Some of you won't, which is why you'll get screwed on this trade, and you'll wind up buying it at $8.20, and then the stock's going to kind of meander around and finally slide down to where you could have bought it the first time, and by the time it does that, you're going to be walking around telling your friends that Jim Cramer stinks. But really what happened is you didn't listen to what Jim was saying. Don't be that guy. Instead, wait for the stock. Wait so that you can get the stock at this price. I wouldn't pay more than $7.50 for it. And my bet is within the next week or two, with the kind of volatility we're having in the market, I think you'll be able to get it at that price. But you're not going to be able to get it at that price today. Now, what about the difference between Super Value and Whole Foods? Cramer says you got to go with best of breed, take quality over quantity, and that's a Whole Foods thing. So he thinks this is where you want to be in this space. Okay, weekly chart. I get what he's saying. It's a nice uptrend, that's for sure. If you're long, there's no reason to not be long the stock. If you want to be long the stock, there's no reason to not want to be long the stock. But that doesn't mean it's right to buy right here, right now. The stock is printing a series of higher lows here, right there. But the stock's now consolidating right underneath the 50-day moving average. Here's what I'd do. If the stock starts trading below this level, then I certainly want you to back away because it's probably going to come back and test the 200-day moving average. Okay, so it's 67 now. 200-day moving average is, we'll call it 63. That's 4 points on a $67 stock. That's a significant amount of upside to give up. So don't be holding this stock if it continues to move lower. On the other hand, though, if it starts moving above the 50-day moving average, then that's a sign of strength, and I think you want to be buying the stock. If you haven't done it already, go do it now. Get over to Real Money Pro and subscribe, okay? It's a new service. It's an awesome service. Lots of good trading ideas. Some of the best are in my articles. Fitzbits, 5 charts in each article, 4 articles a week. What's that amount to? You do the math. It's about 80 charts a month. You've got to be able to find a good trade in there somewhere. So get over there and check that out. Also, go over to my website, that's stockmarketmentor.com. Sign up for my email list. It's totally free, and I will send you one video a day with a charting idea that's designed to do two things. First of all, teach you how to fish for yourself. Second of all, maybe toss a fish on your hook every once in a while. Okay, I'm Dan Fitzpatrick, and I'll see you next time.